Okay. Good evening once more. Thank you for being with me for the part two of this session. In part one, we looked at the workings, one to working six, companies are dating with associates. So yeah, we are about to do what is expected of us. So kindly then take good care of yourself and calm down and follow as we do it together. So yeah, I want to save time for you to so we've already done the workings already in the other session. So if you did not get anything, kindly watch the first session before watching this one. So you kindly get an idea first of what you're about to do. Okay. So here we are asked what the first statement of profit and loss in other comprehensive income. And the second one was a balance sheet. That's it. SFA, financial position. So yeah, I've already done everything to save time. These are working on workings two, workings three, workings four, workings five, workings six. And so these are things of financial position. So yeah, you just add line by line basis. So 16, we only consolidate, we don't consolidate as a sheet. So take note. So that's why I wrote it here for you to understand. 16,000 plus 2,500 plus 500. Hope you understand this because when we report from the upward evaluation, excess fair value adjustment. Yeah. So that one is what we added here together, 631,000. Then the investment, this is the one given to us in the question. This is the cost, the two costs that was figuring it will cancel it. Then we bring the investment from associates, that's the 1,400. Then we bring our goodwill working three, 8,300. Then when we add it, the total non-current assets will give us 652 700. Then the current assets, we added to the parent and the subsidiary, the 180,000 plus 90,000 minus the unrealized profit. So then trade and other receivables to we add line by line basis. Parent in SAP 151, cash and cash equivalent parent in SAP 7,500, giving us a total of 3,55400. Then when we add all the assets, we get 1,800,000, 1,008,100, 108,100. So with the equity side to the capital, let's pick the balancing figure of the parent alone. Then the group between earnings working five, NCI working four. That one's when we add all of them, we get our equity side to be 779430. Then with the current liabilities, we have trade payables of down. We also add side line by line basis 178,000 plus 25500, leave with 203500. Then tax, this tax over here, where is it? This tax, we added 23170 plus 2000, giving us 25170, giving us a total liability of 228670. When we add the total liabilities and total equity, to balance it, you see we have the same thing, 1,808,100. Okay, that's that for the financial position. So with the statement of profit and loss, that one is the simplest part. The only difficult part is that's why people hate it. I think it's mostly the sharing, but the sharing is nothing. Because when you get everything, that one should be even the first one for you to do because that one carry the easy messages for it given to you. Okay. So you see our sales here, Yeah, there's no proration. It's like a yearly base something, so we will not prorate the subsidiary. Supposing as in we acquired it, let's say in the middle of the year, that's when we prorate the subsidiaries amount, all of them. So yeah, we didn't acquire it within the middle of the month. So that's why we didn't prorate the subsidiary. We also used line by line basis, but we didn't prorate a sub. So you see we had the 400,000 plus 150,000 minus intra-group sales, giving us 54900, 549,000. And with the cost of sales still the same thing. Cost of sales at 300,000 plus 100,000 plus 100. Open where the 100 is coming from. The unrealized profits plus 1,005. And also, this one is our impairment minus this intra-group trading and sales. So when we add all of them, when we add and subtract these figures, we get 400,600. When we add both, we'll less the cost of sales from sales figure to get a gross profit. This is what we had. And with the operating expense, there's nothing saying, there is nothing much said about that. So the operating expense, there's it. We just add it. So I've done everything here for you. And also one most important stuff is the profit in associates. Always had it. So whatever you do, so the profit, we just take the portion of it and the profit for the associates at the end of the accounting period. That one you get this from the statement of profit and loss. Okay. Then you come to the investment income. That one it was what? Investment income was 1,000. But in the question, they told us we were being told investment income relates to dividend received from investees entities as what, and they told us what Happy Pay, that's a subsidiary paid 800. So you have to take it out of the investment. And Comfort also paid 200. So we had nothing. And then that's why I brought zero. We have taken zero. Then after balancing the figures, we have what profit before tax. And this is what we had over here. And when we take out taxes, taxes over here, 13,000 plus 1,000, giving us 14,000. And we get our tax. That's when we take our tax from this what we get. Now we share this thing, the profit sharing, that's the issue. Normally, we want to share it. You just take the NCI, you calculate for it, then the difference is for the parents. So the NCI, you just take the post-acquisition profit. That's when you calculate it correct. If you calculate it wrong, you have to use a long process. Take it one after the other. Take the post-acquisition for it, you have to prorate it. Take depreciation, prorate it. Take impairment, prorate it. Before, at this one, before they done everything we were into, so we just take the post-acquisition profit over there. Then, since there is no impairment, because we are using the proportionate method, so there is no impairment in the NCI. So we only need to calculate the NCI's portion of the post-acquisition profits. Then we bring it here. That's around 80. Then the difference is for the parents. Hope we get it. That's it. So that's it. Thank you guys for staying with me. Thank you guys for having patience to listen to whatever I have to say. But if you find it useful, please don't forget to like, subscribe my channel. I just began my channel, so if you like and subscribe, it will help me boost up and give me motivation to make more videos. Thank you very much. Have a blessed night. Bye bye.